Okay, hello, my Teaserking family. How is everybody today? All right, I got a couple of Mark McGuire's for you today. One from yesterday with Andy Sheckman. It wasn't too bad. Andy seems to be getting my message of stop talking about nothing and start talking about something. And Mark was good. Then Mark has his normal Friday show with some guy on it who's absolutely freaking moron. He totally doesn't understand comex or inflation, wants to call it debasement. I laugh at these guys that they keep saying it wrong and they just think they're right. And that's really the problem with a lot of stuff. People think they're right and they're wrong, but they say it and they don't check their sources. Most likely debasement, where it's a currency. You can only debase coins. You can't debase paper, which I've talked about many times here. And yet they'll still say, "Oh, the money's being debased," and you're like, "No, it's not. Money's not being debased." Anyway, so let's take a look at our gold and our silver. Silver was 33.40. Gold's down to 28.94. So it's such a joke. So you have the China time, it's up to 29.40. So when I woke, it's 29.40. Then Europe comes in at about 8 o'clock and it starts going down to 28.23. And then the US comes in at 10. And I have no idea why they're shorting it, as if the price is going to go down, and they get it to 28.94. And then it'll come back up to 29.50, eventually 3,000. So they're losing more money doing derivatives. Unless you can get out of these very quickly, I don't know. Normally they're not day trading. So normally a derivative, if they short it at 29.23, you're not settling it at 2,900 an hour later. So we'll see. This should jump back up. But it's fun when we know what's going on in comex. Now we know this is price fixing, right? We know this is nobody's selling an ounce of gold. This is totally price fixing. This is totally derivative paper gold. Now, why do I bring that up? Well, we'll see, and silver too, obviously. So silver was up to 32.40 at 8 o'clock, and the same derivatives for gold were for silver. The US came in and they shoot silver down. This is why people think it's volatile. It's only volatile because these are derivatives, right? They won't let it go to 35 because then they lose their ass. So they're going to keep pounding derivatives in it because that's what they do. So really, it takes me 2 or 3 times to log in, and now this, and now I gotta, am I still on? And oh my God. Let's see. It's like I can't tell. I can't click on the video. It's not coming on. Anyway, I hope I didn't lose it. Well, the clock's running, so let's assume it.
Hi, I'm the Teaser King. I've been handing.
Yeah, I know I'm the Teaser King. Let's see.
Let's see.
Okay, I'm on. All right. All right. So there's two Mark McGuire's I'll play for you shortly. So again, if we think logically, if they're keeping the price down with derivatives, it's not a free market price. So why the hell would this guy who's Mark McGuire's guest today say, "Oh, I looked at my chart and gold and silver might hit $35." What the fuck's he looking at? There is no chart. You cannot technically look at gold and silver with this at all, right? So it doesn't make any sense to chart it. What are you charting? So what are you charting? Well, silver might hit 35, and this is where I lose the guest. This is where they don't understand the basic concept of if people are price fixing it and keeping the price down, what are you talking about 35 an ounce for silver? It won't get to 35 an ounce until, look what happens. It got to 33.40 and then it got pushed back $1. Why? Because they don't want it to go over. They're price fixing it. So how can you chart that? It's just amazing how stupid these people are. They just, now, the regular kids I don't call stupid. This guy has wrote a book and he comes across like he's some expert and he's a fucking idiot. So this is the problem you have with these guests that he has that just don't understand comex. They don't understand debasement is not inflation. And it's just frustrating because you're trying to get real people. All right, this is my Celtic salt. And you just put it in your mouth and you take a drink. And when you drink water, you don't drink the whole glass at one time. You just kind of go, take a gulp. That's how you're supposed to drink water, because otherwise it's too much. And that's how you take the Celtic salt. And now I just got 82 minerals in me. And this is why my back's been fine and my feet have been fine and I feel good, is because of the Celtic salt and the cayenne pepper. So yes, it definitely makes a huge difference. All right. So again, this guy just doesn't understand it. And you wonder, Mark McGuire, what the fuck are you doing? Do you not understand it? Hey, Pat, how are you? Pat, do you understand comex and paper and the fact it's price fixed? And that's why we don't see $50 silver, not because of no demand. As you just pointed out, we have huge demand. And this is the point. The demand's huge, but the price doesn't reflect the free market, which has been my point for 4 years now. However, we still don't get it, do we? So it's just, it's as Bobby would say, it's a shake my head. What's going on? And this is the same with gold. It was 29.40, which is not close to its real physical price. And now it's down to 2,900. And you're like, why are these derivatives allowed, first of all? And now they're asking for delivery. And that's why the U.S. keeps getting gold from London. They must have it there because why don't they have it in Fort Knox? Because they don't have it. That's another point, that they don't have it. Because if they had it in Fort Knox, why would they get it from London? Why would they have any gold in London if all their gold was in Fort Knox? Let's use logic here. So, as I'm trying to say, Pat, yes, I understood the derivatives are make-believe, Madoff, fairy dust. So why does a guy on Mark McGuire not understand that? Well, my chart shows silver going to 35. And I get frustrated because I go, there's no way silver's going to 35 until JP Morgan allows it, until they blow up comex. So comex is a paper derivative market, not a free market. And it's there to control the price of gold and silver and other commodities, coffee, frozen orange juice, and basically everything in trading places, and I believe oil too. So they're trying to control the price with the government, which is called communism, not the free market, which is called capitalism. Why are we not using capitalism for gold and silver? Oh, because Henry Kissinger put it in and he was a communist. Okay. So we have very fixed people like JP Morgan and Goldman Sachs and Larry Fink who run these things, who are basically communists, who want to control, they think they can control the markets better than a free market system, which they can't do. So COMEX is set up, as Pat's saying, with fairy dust, and they're making money on their derivatives, which is why they do it. It's not really to set the price, it's just to play derivatives. So a derivative is an option, so you can go up or down on it. It's a put down or a call up. So when the price is low and you think it's going to go up, you're supposed to do a call option. And you call option, let's say gold at 2,900, it hits 2,940 and you sell it. And you sold it at 29, you bought it at 2,940, you're a happy camper. Then it's up to 2,940, you do a put option, which is I sell it, I believe the price will go down. You sell it at 2,940 and now you're buying it at 2,900. And as long as this keeps happening, but it's fine that it happens, but it shouldn't be setting the price. That's the problem. You can do it on the side. They do options in Apple and Amazon and all those companies. They do options in those, but it's not price setting. The price is set by the stocks, by the market. Even that's manipulated. So as I say, even though the gold's manipulated, we know it hasn't hit the true physical price yet. And that's what we're basically waiting for. What is the real physical price of gold and silver, which Mark McGuire will touch on, and I haven't gotten there yet in the show. So he brings a guest on, and it's just, you're just shaking your head going, this guy doesn't understand that. And how do you not get it? I mean, how simple is it? Obviously, nobody, when gold goes from 2,940 to 2,900, nobody sold an ounce. Do you think people are selling their gold? I was listening to one guy talk about arbitrage. Well, you're buying the gold on COMEX and selling it on the Shanghai. What's he talking about? Nobody is selling their gold to Shanghai. First of all, who can buy it on COMEX? Me and you can't go to COMEX and say, hey, what am I going to get, a 100-ounce bar? So we're not buying gold on COMEX, and we're not flying to China and selling it there physical. What the hell is this guy talking about? Central banks are buying gold. They're not selling it. Nobody is doing arbitrage, okay? You might do it in paper, but you're not selling your physical back to China. Are you kidding me? So that explains why China's price might be higher, but nobody would, in their right mind, would is buying their gold at 2,900 and then taking it to Shanghai and selling it for $29.40 and making $40 on 400-ounce bar of gold. Nobody's doing that, okay? It's too stupid to do it. I know the banks are stupid. They're mostly crooked. They're all illegal. However, they're not stupid enough to sell physical gold for a $10, $20 profit. So arbitrage is not what's happening. Stupid thought. That's by that Mark Moss guy, who I thought was a total idiot. I call them idiots like I call Lamar a bad quarterback. You're never going to win a Super Bowl with Lamar. He might win a few games for you and get lucky, and then he runs into Buffalo or Kansas City and he loses. And that's what these guys are that I call idiots, that they just don't get it. COMEX is that, do they understand it's derivative? I don't ever hear them saying it's derivative. Very few people, mostly Egon and Mark McGuire, are doing it, which is why we bring them on. But that's it. So let's see how stupid. Well, let's go to Mark McGuire yesterday with Andrew.
I'm going to reveal the only 5 to 7 stocks that I believe you should trade options on. And
we don't give a fuck.
major changes here, massive changes. This is too big for the old dated comex marketplace. All of us just want a fair, level playing field, please, where our clients, and we all know where we are. It is simply supply demand. I don't mind if it's higher or lower. Just what is that real price? That's what we're.
Mark gets it. That's what I'm saying. What is the physical price of gold and silver? And that's why, how can you chart something where you don't even know the price? Right? Gold is not 2,900 physical. And that's why you see my titles call it paper gold, because we don't know what physical is, but we know it's got to be at least 10 times higher. Professor, how do you think 10 times? Where are you getting that number out of your ass? Well, let's think about it. If they're doing derivatives, which are 96% paper, 4% physical, and the gold goes from 2,940 to 2,900 today, and it'll go back up. You know, it's always 10 o'clock, 10:30. It's the normal fixed time, 10 o'clock, 10:30. And it's being suppressed by 96% paper. So I know it's at least 2,940 if you don't have the derivatives doing it. But that's still not close to the physical price. But you can see it dropped $40 and it does it every day. Well, if you're dealing in physical, you don't have that. You don't ever have a drop because nobody in their right mind is selling gold. Not with this massive inflation that we're having. So therefore, what is the real physical? And it's got to be, I would say close to 20,000, easy, because you wouldn't have these drops, right? So it goes up to 2,940 because of the buying. It would go to 3 to 4 to 5,000 to 10,000 because you're not getting the drops. Look at silver. It went to 33.40. Why did it go back down to 22.40? Derivatives not selling. So again, silver's 33.40. It's not going to come down. That's why I say it's not volatile. The derivatives make it volatile, but nobody in the right mind is selling it. Who's selling it and for what? Why would you sell 1 ounce of your silver at this ridiculously low price of $32, $33 when you know it's $1,000 ounce? I told my friend, she says she's in Bitcoin. I says, what'd you get into that? 65,000. And it's now like 95,000 now. She said, well, it got up to 125,000. I don't remember seeing that. I saw it at 105. I don't ever recall it at 125. And I'm like going, but that's my point. It was 125 and now it's back to 95. At what point do you sell? Oh, I don't know. So you're just going to hold it and hope it goes up. But when it goes down, then what? You could have sold it. So you could sell it now and make 35,000. I don't know. What did you buy? 1 ounce? I mean, that's the other thing. Like, well, what did you buy? 10 ounces? You had 600,000. I said, sell it. I said, if it was me, and you know how strong I am in economics, I said, if it was me and I was stupid enough to get into Bitcoin at 60 and now it's 95, I'd be selling it as quick as you could do it, making 35,000, turning around, taking the 95,000 and buying gold with it. Because gold and silver are about to explode. Bitcoin, you have no idea. And I love how they try to use, well, it's limited. There's only 21 million. Well, what are they? They're not coins. You have 21 million what? Spreadsheets? Well, they have a blockchain, a ledger. Well, yeah, so does everything else. You use a credit card, there's a ledger. You get your statement at the end of the month, shows all the transactions you made. What the fuck's the big deal about it? And then to get to the real value, you have no idea what Bitcoin's at. So because Bitcoin is, they're not even coins. So I think that's what they're talking about with stable coins, is to have something physical. So you could take to the market, because the market's not going to take Bitcoin. The restaurants don't take Bitcoin. The doctors don't take Bitcoin. The lawyers, go try to pay them in Bitcoin. Nobody takes Bitcoin. It's not, so therefore it's not money because it has to be acceptable, which it isn't. It's a cute thing like my card. Now, I do want to show you, I've taken out some new cards. As I've told you, here's my Montana rookie. And you can see it's pretty fucking centered. This could get a 10. It might be, well, I don't know where it is in the back is pristine. Very sharp, very centered. It's a beautiful card. Could be a little up and down on the back, but I don't know if that matters. I'd hate to lose a 10 because of that. But it's very, very nicely centered here. It's a little bit fatter here than this, but you can do 60-40. Like I say, this is a very hard card to get 50-50. That's why the 10s go for so much. So then we bring out my Tom Brady rookie. And this is a Bowman Chrome rookie. This is a refractor. It says refractor on it right here. And I don't know, this is worth a ton. This is his rookie card. There's really, you don't have to worry about centering because by now they've made it where the centering's perfect. The card's perfect. This should be a 10, worth a fortune. Then we get into a Cal Ripken rookie card, which looks pretty fucking centered. This also pretty much looks like a 10. Nicely centered, nice sharp corners because I wouldn't buy it otherwise. Very clean in the back. You can see it's a little bit left to right, but I don't know if that's the way it was made, where it's fatter on this side than that, but it might just be the way. But how much do they look at it? I think they more look at this. So we've added Mr. Ripken's rookie card. We got our Bobby Orr, 1969. This card is beautiful. I searched months for this. Not being off center, it's up and down, and it doesn't have, people put the stamp on here and ruined it. So you didn't put the stamp on it. This is a little off center, a little too much here than there. But again, I don't know on the back how much that matters as much as it does on the front. Maybe it does, but on the front, it's a beautiful card. Of course, center, perfect centering and everything else. So Mr. Orr, and then I'm going to show you a limited card. Here's a Barry Sanders Bowman. It's called the Bowman Gold because of the gold there, but the key is it's numbered to 99, means there's only 99 of these. Now, this isn't worth a huge value, but it is have a nice value, 99, and it's perfectly centered. Should be a 10. And again, it's Barry Sanders. Now, I also have in this set Joe Montana and Dan Marino and Emmitt Smith and Jerry Rice. Troy Aikman, I believe. I would go after the big 6 or 7 cards, the 6 or 7 superstars, Marino and Aikman and Elway, Marino, Barry, Emmitt, and Rice. Those would be your 7. Kurt Warner once in a while. And last but not least, we have the Mario Lemieux rookie, which I just looked at was $5,000 on eBay. PSA 10, perfectly centered, nice back. And you can see it says tops here, right? It'll say O-Peachy if it's O-Peachy, which is Canada's tops. This is tops. Now, this is not limited, but it's his rookie card, and it's Mario Lemieux. And again, because it's Mario Lemieux, you have demand. Because it's his rookie card, you have demand. So I pulled out a few cards. I put the Mahomes card away. If I want to show you limited now, I can show you the Barry card is 99. And that's what I actually started that because I was at a card show and there was a guy from Beckett. Beckett was a sports card show. Beckett was the magazine. And I told the guy, we're kind of friends. I'd buy from him. He was a dealer. And I says, well, what we need is limited cards because there's too many of them. They're all going to lose value. I says, if you have limited cards, and I'm saying, 500, 1,000, then they'd be worth more, and you draw more people in because they would try to get the limited cards. So this 99, the reason I bought this Barry was it was only 99. The reason I bought the others was Ripken's rookie and Brady's rookie, Montana's rookie, Orr's rookie, Lemieux's rookie. The rookie cards have more because it's the first. But notice the player selection, all superstars, huge demand for all these cards. I show you the Montana 110,000, the Brady's not 110, unfortunately. The Ripken's up there, the Orr. I mean, I've never seen a PSA 10 in that. So if I get a 10 in Orr and I get the 10 Montana and the 10 in the Ripken, I'm a millionaire. But getting the 10's another story, and sending in that Orr card, the guy I would never get back. I would never get that card back. That's the problem with it. Because think about it, you're the grader at PSA. Are you gonna keep? So I'm sending you this beautiful Bobby Orr second or third year card. I'm sending this to you, and you get it. What are you gonna do? You're gonna put it in your pocket, and you're gonna give me a PSA 8. And there's no way I'm getting this card back. But I can't mark it. I can't do anything to the card. Put my initials on it, or do anything to make sure this is the card I get back, unfortunately. There's no serial number on it, unfortunately. He was 21 years old here. This is 1968, 69. So this is 1969 card. But there's nothing I could do here to know I got this card back, or to say, hey, this isn't the card I sent in. There's nothing because I can't write on it. If I do, the card's worthless. That's why you never get these cards autographed. If you're going to get a Ripken or a Montana autograph, you do not use these cards. You use a second or third, or you go get a 1989 Topps Montana or Ripken that's worth $10. That's what you want to get autographed, not a rookie card. It's amazing how many I see on eBay, and you're like, oh, what the fuck? What an idiot. Why would you do that? All right. So I just was excited to pull those out, give us a little change of pace. So Mark McGuire and Andy Scheckman, it's called Andy McGuire on the End of the Metal Manipulation, which we were waiting for. Most of it's because they don't have inventory, and therefore they gotta, like, if the U.S. got gold from London, and I don't know why, that makes no sense to me. London doesn't have, so they must have taken it from an ETF or some bank to us. We must have paid it because London needs money. We bring it in. It means we don't have gold in Fort Knox, and we need to settle up on comex. So if we're doing all that, that's the problem. We need to settle up on comex, and that means comex breaking because all of our derivatives are 4% physical gold, 96% bullshit air. And if they're taking delivery, you have to come up with the 96% bullshit air. And these are the Chinese and the Russians you're fucking with. They're not going to take it. Just like they were saying about the debt. Oh, we don't have to pay the debt. Oh, really? You're going to default on the Chinese and the Russians? I don't think so. They're the ones who hold the T-bills, the Japanese, the Chinese. Maybe they'll sit there and say, look, we're not going to pay you. We'll do something else. Trump, oh, well, we'll do it with whatever. Maybe. I don't know. I don't think they can just default on the debt. I think that's a big problem. Nobody would ever trust them again. You wouldn't be able to get a loan. The way you spend, you have too much spending that you need loans on. You can't keep printing money for Social Security, Medicare, the defense, and the interest on the debt. So if you're thinking, well, if we get rid of the debt, we get rid of the $2 million in interest, and then we can almost balance our budget, and then we get rid of the debt, and you got to pay the debt off, which you can't do. There's no way around it. There's no way of just saying, we're not going to pay it, and sell anything to anybody again. Who would trust you? Your whole credibility is gone. and you can play whatever game you want. Nobody's going to lend you a nickel. Nobody's going to buy your T-bills. How the fuck are you going to survive? So I don't buy they're just going to default and go bankrupt. We're already bankrupt, but we'll see. All right, so
Going to discover.
let's go to Mark McGuire. It's a pretty good show for Andy Schechtman.
This is Little by Little.
Because
with
Mark
Schechtman.
McGuire answers a lot of questions that we want him to
everybody,
answer.
Welcome back after a little bit of an extended vacation on my behalf to another episode of Little by Little. I could not be more excited to have.
What's good about this is Andy Schechtman shuts up and Mark McGuire gives us the answers to everything we want to hear. That's why we go to his show. The problem with Mark's show today is he's got some guest on who doesn't know what a derivative is and what a stock is, and you're like questioning that. So here we go.
Of Andrew McGuire with me, a man I've been
Mark
following for
McGuire.
a very long time. One of the guys that I was introduced to through GATA, along with Bill Holter and
All right, let's.
Andy Hoff.
How is it plausible?
Hey.
Did you know 4 out of 5 dermatologists would recommend a whole body deodorant like
So now, like, if I skip ahead, I'm getting these commercials.
That could be the only non-Basel III compliant physical exchange, gold silver exchange on this planet Earth. How could it not be drained? And I think that's the
Teaserking
story
comex.
that we're really looking at here. I think to answer the question is it's happening not because the U.S. markets wanted to comply. Why did they? They could have complied. They split, and as we know, and really, it was pretty clear when the Bank of International Settlements squared all their last 500 tons on the 3rd of November 2011, just 2 months before they revalued gold as a first-year asset class. So they're now zero, and the only borrowers, the only people that continued to borrow physical gold from the Bank of International Settlements, the Bank of England, have been the Fed. Now, why would they do that? Why, when every single global facing exchange is compliant, why is it when every single bullion bank, and we connect with some of the best top first-tier liquidity providers, as you do, they're all long for their own book. So how would it be possible is the question in my mind.
So long means that they think gold and silver are going up. Short means they think they're coming down. So all the banks think gold price is going up. That's what he means by long.
For them to exist even this far in, where you see a price that's being generated by a very dilutive paper market where manipulation has been rife for 50 plus years. And simply because it was possible, because it was a paper settled market, cartels could operate, it would be settled amongst their books, and the resulting price ended up being the accepted global price. Well, of course, every other central bank is looking at that and preying on it. So, of course, so I think the reason that this manipulation that we have historically seen and given evidence for, as you know, we've provided a lot of evidence to the CFTC, the DOJ over years. In fact, I can send you the link for the Russian television interview we did where Bart Chilton admitted that we had reopened the closed down silver investigation, leading to the actual imprisonment and fines, close to $1 billion fine for JP Morgan and some of these actors. But the thing is, I think what I'm trying to say is, while all that's happening, in this meantime, everyone else has gone, right, I'll tell you what, that's cheap. That's not the real price. Why don't I just come and take it? And we had evidence, and in fact, in my last episode, I provided, I reported that we had two proxy buyers that we personally know had both stood for their 6,000 lot comex limit, the full amount that they were allowed to do, 18.6 tons. Whatever.
So he means is they're taking delivery. So in other words, COMEX is fucking around JP Morgan doing these derivatives, and then these Chinese and Russians are saying, I want delivery, and that's what he's talking about is how much. So they got their full 6,000 tons or whatever of the delivery. That's the max they can get, and they maxed it, but it's not all of it. So that's going to keep going. That's why I don't understand the derivatives going on today. What the fuck are they doing? They're still going to take derivative. Why are they shorting the gold? Why are they still shorting it, hoping the price goes down when all these demands, if everybody wants it, why would you be shorting instead of going long? It's just, these people are too stupid really to talk to.
It is. And they weren't the only ones. They cannot be the only ones. So I think, in a long story short, it's being sorted by this manipulation has to disappear because the gold is flowing out on a one-way journey at a huge discount into all the other global exchanges, sovereign buyers, central bank buyers, institutional buyers. So, yeah, I mean, sorry if that's a long answer.
Oh, it's beautiful. It's beautiful. And I couldn't agree with you more. And maybe it just seems like something's different this time, Andrew. And maybe they're waking up to the fact, they being Trump and the Trump administration, that by suppressing the price of gold, we're playing right into everyone else's hands instead of letting it rise. And with that being said, and I agree with you. I mean, and it's also very uncanny that JP Morgan took over custodianship of not only S&P.
Oh, not the biggest crooks in the country.
Now too. There's a lot going on under the scenes. I mean, under the sheets, if you will, that just feels very different this time. And let's look at February as an example. We saw a record 59,296 contracts in for delivery on COMEX, to your point. That surpasses even the 2020 COVID crisis levels when JP Morgan and other huge commercial banks were delivering lots of gold. To your point of all of these deliveries that are being made, you think the banks are positioning themselves for some sort of a structural shift in the monetary system? Are we moving towards some sort of a reset or a gold-backed system? It kind of feels that way to me.
Of course.
I'm curious to your.
Did you hear about BRICS?
Let's talk about Acorns. Everyone knows it as the app that investors spare change. But how did it start? Where did it start?
Of a reset or a gold-backed system? It kind of
too
feels
many
that way
commercials
to me.
on
I'm curious
YouTube.
to your thoughts on that.
Yeah, and I think on the agenda right now, I think Trump's talked about Bitcoin. He's talked about stable. He's talked about the crypto world, but a lot of people don't understand how this could lead into, and what a stable coin. What is a stable coin? So really, if we are looking at the crypto market, and this is front and center right now, and also we've had certain sort of things said recently by the current Treasury Secretary, maybe we need to think about creating a sovereign wealth fund. So what is a stable coin? And right now, why do we need, for example, a stable coin? What is it? It is, the definition of it would be, I mean, the simple definition would, it's a crypto asset that maintains a stable value relative to a stable asset or a pool of assets. And essentially, it could be fiat-backed, which often we see lots of fiat-backed stablecoins out there, Tether, etc. And even Kinesis is coming up with a stablecoin backed by I think 16 billion at this point at the opening of a USD. A US dollar equivalent, USD.
Why the fuck would I want a stable coin? Now, to me, my logic says it's a coin. So my logic says instead of Bitcoin, which isn't real, it's just computer, whatever. So you can't really have it. I believe a stable coin is something like this that you can actually hold in your hand. Now, how do you value it? I have no idea. You're going to value it against fiat money that's worthless, or Bitcoin that's based on fiat money that's worthless. Why don't I just have gold? Why do I need stable coins? Just give me the fucking gold, and I don't need to worry about anything else. So that's my idea of what a stable coin is. It's a physical Bitcoin instead of this bullshit Bitcoin that isn't real. That's my idea. Now, how it's backed, it's the same as fiat. What's the difference between a stable coin and this? Nothing. Because this is worthless and the stable coin's worthless. If it's not backed by gold, it's worthless. This is not backed by gold. This is not backed by gold, and a stable coin won't be backed by gold. Therefore, they're all worthless. They're all fiat. A stable coin's fiat. There is nothing real about it. So that's what you have to really understand. It's not backed by anything. It's worthless. So don't go running the stable coin. But I think it's just to give you a physical Bitcoin is my guess. I don't know, but that's what I guess, because everybody's going, well, Bitcoin's not real. And I love the 21 million Bitcoin. How the fuck do you know there's 21 million? Is it, I know there's 99 berries. This is already coming in handy, right? Because it says 73 of 99. So I know there's only 99 of these because they're numbered 99. How many of these are there? Could there be 21 million of these? Sure. How many are PSA 10s? Not a lot. And this looks like it could be one of them, but it's not numbered. We don't know how many there are. And that's what Bitcoin is. You don't know there's 21 million. They said there's 21 million, so you just believe it? Yeah, and 9/11 was not a gold robbery by the Israelis, by the way. So if you think we went to the moon and you think there's only 21 million Bitcoin, good luck to you. I wouldn't trust anything that isn't numbered 99. Then I know there's 99. And even here, I really don't know there's 99, except for if I found another 73, I'd be a rich man because I'd go sue Tops and say, well, wait a minute, there can't be 273 out of 99s because you only made 99 of them. Let's go to court and I'll be a rich man. So I believe that's it. But in the Montana, you don't know how many Montanas, but you do know it's hard to get a 10 because you can see the centering problems. You can see how it's thicker here than on the other side. Will it still score a 10? It might, but it's not perfectly centered. Most of the other cards, the Lemieux's great, the Orr's great, the Berry's great, the Ripken's pretty centered. So that's the key to centering. The 10 is sharp corners, good pitcher, and centered. You got to have all three to get a 10. Usually the corners are a little dinged up. There's a little scratch on the pitcher, and the centering is what usually kills a 10. The Jordan rookie cards, none of them were centered. They were all way off. So why buy them? They're at best, they're going to be 9 OCs, and they're not going to have a value. All right.
One is what we're calling, but essentially these stable coins are they're either a fiat currency or they're priced live globally, valued to a commodity or a pool of commodities, which of course can be gold or silver. And indeed, so you would have, or gold and silver could be a specific weighting in backing a commodity pool. So essentially, given that there's 1.4, according to the World Bank, it's probably bigger than this. The World Bank figures there's 1.4 billion people in the world unbanked, completely unbanked.
What does that mean?
And I would strongly suspect it's bigger than that. But so really, I can see something has to crack here, because now we're talking about the ability to, and it looks like legislation is coming through. I think the CFTC has called a meeting to say, well, maybe we need to regulate these things, which I would welcome enormously, because if you can regulate a crypto assets, then you get rid of the bad guys. Essentially, what you need to know is that it's fully backed by whatever you're backing it with. And therefore, you'd have to pass all the smell tests in order to do that. But so essentially, I think this is a pivotal moment in from the gold and silver perspective that we deal with, and the markets that we've been following, and the manipulation that we've seen in the past, suddenly finds it's too big. It becomes, once you've actually put this out on the blockchain rails, and you are absolutely certain that when you are buying or selling something relative to the foreign exchange price that's traded live, therefore you have a price, and as long as it's Basel III compliant and is physically deliverable on a T+1 basis, which it is, but gold is, silver not yet, but essentially we're going to have a fair market price evolve. It'll be a supply demand price that's not fettered, not buried in this smoke and mirrors, viscous coupling where what is that price? I mean, what is the supply demand price? Well, you can't have a physical delivery price in the East, in the East, that is different to a paper diluted global price. So I guess really what we're saying is, I see major changes here, massive changes. This is too big for the old dated COMEX marketplace. And to me, I think there's only one solution. The COMEX market has to become Basel III compliant. It has to be. It has to become physically deliverable. How would that be done? Well, personally, why would you just not raise margins 1-to-1? So in other words, forget all this discounting that's going on. Why would you not actually have to, in order for it to qualify to become Basel III compliant, you'd have to have 100% margin. The traders would change, because physical demand is being driven. This price that we're looking at now is being driven by physical demand, not speculation. So it's history. And I think that we're just privileged to see 50 years of absolute mayhem translate into something where you and I, all of us, just want a fair, level playing field, please, where our clients, and we all know where we are. It is simply supply demand. We don't mind if it's higher or lower. Just what is that real price? That's what we're going to discover.
Oh, so he wants capitalism. Funny about that. So as we talk about it, first of all, there's many markets. So this card we see for 110, we see for 120, we see for 80. So there isn't one set price for the Montana rookie. However, we do have a free market on it. It is capitalism. If I go on eBay and I put this out there and somebody buys it, that's free market. Nobody is telling us what this card's worth. The market is telling us what this card's worth. So if the market says, I'll give you 100,000 for this card, then that's what it's worth, because the market has spoken. And that's why I talk about markets. So what you have in COMEX is not a market, because it's derivative. So it's not me and you buying the gold and silver, which is what I keep focusing on. It's JP Morgan and his stupid derivatives selling, doing options, and buying and doing puts and doing calls and making the price go from 29.40 to 29, and nobody sold an ounce. What the fuck is that? That's absolutely ridiculous. And that needs to stop. But since JP Morgan's running the government, how is it going to stop? Now, Mark McGuire saying all the physical. The reason COMEX started, and the game that's being played with COMEX is there to price fix the gold and the silver. That was the whole point, because we had the gold. And in 1971, when Nixon took us off of it, everybody knew we were printing too much money, and the dollar was like the major currency. So I think it was France that started saying, give me my gold then. It's $30 an ounce here. Here's all these French francs. Give me my gold. And so they tried to price fix the gold to keep the price down. I think the price went up to 800 an ounce. And they said, well, that's too much. Let's price fix it and keep it at 35 or 40 or $100 an ounce. And then when they want it, it's only 100. It's not 800. And should have just went free market. And if everybody wants the gold, then maybe you shouldn't have printed more to pay for your stupid wars. But we've been on the wars since the World War I. As soon as we went to the Federal Reserve, we went on war. We've had wars every 10 years. World War I, World War II, Korea, Vietnam. Now Obama. Or whatever, Saddam Hussein, and then and now this war and Iraq and Ukraine. It's a war every 5 minutes because we're being run by the defense contractors. Why are they running our country? Because the guys in charge are all bought and paid for, and that's the problem. And since they're all bought and paid for, we do what they want, which is ridiculous. So the idea is to get rid of comex or to make it Basel III Tier 1, which is what's happened in gold, and that's why gold's now up to 2940 or 2900 or whatever. We know it's going to 3500. So it's going much higher if we would kill comex in this papering the gold with paper gold, flooding the market with paper gold. But they're doing it with silver. They're flooding with the paper silver. So, silver's getting to 33.40. We better throw paper at it and dilute it, which is what they're doing. But you can't do it with physical. So that's why silver has to go to Basel III and Tier 1. When's that going to happen? I don't know, but silver will not go up until that happens. So don't think, the supply short and this is this and that's that. It ain't moving until you make it a Tier 1 asset, which means it's like gold and it's like T-bills, and it's Basel III compliant. That's they want to take delivery. Right now, a lot of these countries are just going right to the mines. Why we even have comex, I don't know. It's not really. It was to suppress the price. It was a price control, but why we have it now, I have no idea, except for the corruption, and they're making monies on the derivatives, which they can be doing like they're doing on Bitcoin, like they do on Apple and Amazon and all these stocks where they do the derivatives. So I don't really see why they can't have a real market and the delivery like they do, like Apple price. Apple and Amazon are priced at market. So why can't this? Anyway.
Yeah, it's kind of crazy too, Andrew, because as this is happening right now, as we're seeing massive delivery demand, massive movement of metal into the COMEX vault under the pretense, which I don't really believe, of tariffs. I think it's deeper than that. I think there's too many things happening that to me just seem deeper than this. The public is still largely asleep. You mentioned stable coins. I did an interview with Judy Shelton, and Judy talked about a 50-year treasury pegged to gold. She thinks that Trump will issue it July 4th, 2026, the 250th anniversary of the country. She said they spoke of it during the first administration. My hope is she becomes on the board of governors for the Federal Reserve, maybe even takes over for Powell. She's a gold advocate, and her idea is to issue 50-year treasuries. We talked about auditing Fort Knox and the New York Fed in terms of the gold holdings. We even talked about gold revaluation. As gold is held in every central bank balance sheet, can't make it up in the gold revaluation account. A lot of things happening. You have, as you mentioned, Scott Bessent came out recently and said that he wants to monetize the asset side of the balance sheet. Could that mean he wants to monetize gold, to revalue it? Judy Shelton said, I would like to see stable coins issued, to your point, off of the 50-year treasury collared to gold. A lot is happening under the scenes. And I guess really my feeling, and maybe I don't know how you feel about this, I think I do, but with all of these things happening, all of the gold rushing here, the massive amount of sales we've seen out of GLD, you could argue that that's the public selling, or maybe it's actually the insiders that are preparing, to your point, for this rehypothecation. And they understand that they have to be Basel III compliant. They understand that this massive overhang is a very, very big potential problem for them. I guess really what I'm getting at is, I mean, do you think that we are at the cusp of gold playing a more formal role in the monetary system? And does the Fed at this point, because it's happening now, maybe the Trump administration is smart enough to see this happening where the previous wasn't, do they want gold prices to rise so that they can use gold as a tool to stabilize their balance sheet? That's kind of what Judy Shelton was saying. You think that's a possibility?
I think it makes complete sense to me, because, I mean, again, I think what we're looking at from the bigger picture is we're now looking at the US becoming a part, from gold and silver is concerned, a part of the global reset that we're seeing now, and they've been like an anchor trying to fight this all the way. And I think we just reached the point where there's too much technology coming in now. There's the ability to value the gold price is being revalued globally, and that liquidity that you and I have tracked this for so long. That liquidity that was partially paper centric has been flowing ever so slowly, one day by day, month by month, year by year, to the point where the lines have crossed, and where the physical the price is being settled in the physical markets now. So it's impossible to not comply. And I think so. Yes, I think this is the next step. So I think, I mean, you've talked about ETF outflows. Yeah, and that's concurrent with COMEX outflows, and people talk about, well, look, yes, it's all to do with tariffs, and we've seen these big EFP spreads, and no, the EFP spreads is simply because the paper markets are getting drained.
Take your money to the next level and get a 4% APY on uninvested cash.
Fantastic amount of. I make 5 o'clock in the morning phone calls to all my Asian desks, Chinese contacts, Indian contacts, Saudi contacts, etc., etc. And these desks, just every morning they say, "Hey, we're buying. Hey, guess what? We're just going to sell later." I think we saw that again today. We're just going to sell at the pit open, and guess what? We're just going to grab it. And so we've seen this ridiculousness, this absolute, I mean, to mind-boggling stupidness where Asia buys, the West sells. Well, trouble is, most of the open interest, the COMEX open interest, where you could go fool enough people to buy into that, sell short with you, put a few bids, get them to take some profits quickly. Oh goodness me, we're going into hell in a hell basket. So I mean, I think while that has been going on, then literally that open interest, the 75% of, I mean, we talked about it, I think Bloomberg talked about it in the past, where they've actually said 75% of all the oil traders really control that market. It's just pure speculation. It's why we got the volatility. Same guys that are running the gold and silver markets historically. It's just momentum traders, like 75. They don't care what the price is. It doesn't matter. They're not ever going to take delivery. It's nothing to do with them. This is just a paper trade. These guys have anchored their boat to Bitcoin now. I think, to me, there's just not enough of these guys to take that bait anymore. And I think, so yeah, these guys are laughing their heads off and say to me in the 5, hey, we'll keep buying, but we're gonna save some dry powder for when the West opens. And
you mentioned the Basel III compliance, a T+1 trade settlement, and in London, we're hearing about a 6 to 8 week delay for delivery. In London, it's estimated, to my knowledge, Andrew, that there's about 400 million ounces of gold and 5 billion with a B ounces of silver in cash spot contracts that are standing in the London market. Yet, when I look at the free float of metal available, it's just a fraction of that. They're trading in silver 3.5 times annual global mine supply per day, nearly 3 billion ounces of silver per day. They say 290 million, but those numbers are a fraction because they're only posting the final settlement numbers. They say it's up to 10 times that volume. So roughly 3 billion ounces a day, 3.5 times global annual mine supply with only about 300 million ounces of float. Same thing is true in gold to a lesser degree, about 2.5 times annual global mine supply per day. So following this same thread, because you are in London, if this rush for physical delivery continues, and whether it be flowing to the United States or flowing to Asia, both of which I believe are happening at this point, could this really break the decades-long price-setting mechanism that is controlled by the Bank of England in the City of London? I mean, are we that close? Because, in COMEX, it's an exchange. They can say force majeure, cash settle to protect the exchange. But London, that's not the case. It's over the counter. All of these contracts actually should be delivered if wanted. Are we that close to seeing this break in London as well?
yeah, and I think the connector, the key is you've got, as you say, London, NSFR compliant, T+1 deliverable. The FX price has to be backed. In other words, if you put up an offering to buy or sell, you have to, under NSFR compliance, you have to have that physical to deliver. Not so the COMEX. However, here's the problem. The exchange for physical mechanism connects the COMEX to the T+1 NSFR compliant marketplace. So, yes, so basically, that's why if you have the capacity to take 6,000, to buy your 6,000 lots, you're the limit they'll allow you to buy. And you're a sovereign wealth fund, you are a central bank, institutional trader, wanting to actually find bullion that can be delivered not 3 months from now. And Andy, I'm hearing this morning up to 12 weeks. So it depends. If you want big size, up to 3 months. 12 weeks is 3 months. This is craziness. So
isn't it like a default though, Andrew?
Well, in a sense it is, because what they're doing is they're settling, and they're saying, this is the Bank of England and is saying, and the LBMA is saying, yeah, okay, but you can have it in 3 months. You can have it in 8, 10, 12 weeks. But what they're offering you is a paper forward. That's what they're offering you, is a paper forward, which you hope you better get that. So the point is, a paper forward says, yeah, okay, so really I can now, because it's technically NSFR compliant, I can then marry that forward off into New York, because it's supposed to be a first-year asset class, but it ain't. A forward is not. But this is the scam right now, is you've got the ability to actually say, yeah, well, here it is in 3 months. Here's the forward, and here we're backing it. The Bank of England is backing it. Here, we'll even give it to you at a discount. What kind of nonsense is this? And then on the other side of the fence, you've got an EFP where you've actually somehow squared the issue, because yes, it can be shipped out later because you're backed. I mean, you're on paper, you're backed, but you're not backed physically. And so as much as we're seeing bullion flowing into the COMEX vaults, the New York vaults, we're also seeing these same guys pulling it out and shoving it out the other way. So you've got this craziness going on here. And so to me, this is, yes, the break point. It has to be the break point. It is technically a default, because really, if you say you can't deliver and it's T+1 compliant, the Bank of England, I mean, half of the vaults, the listed vaults, what's it in the vaults in the UK, is supposed to be LBMA vaults, Bank of England vaults, is supposed to be half of it's only half of it's central bank owned. So why is it taking this long? I mean, I could go in there tomorrow and unload a trolley load for an immediate delivery. Why would I have to wait all this time for what's supposed to be there? It's actually supposed to be there because they don't want to give it up. They just know that this is why what tells me something is going on. They're going to have to revalue gold. They're going to have to revalue it. The COMEX has to become Basel III compliant. I think this all feeds into what you're talking about. The new Treasury Secretary coming in, looking at this situation. But Andy, we know, we have empirical evidence to say, if you are going to back US Treasury gold, if you are going to revalue, US Treasury gold, you need an audit. Well, hold on. We've got empirical evidence to suggest that there's a lot of double ownership. Whether the physical gold is there, I don't know. No one knows if it's physically there, but is it, how to what degree is it rehypothecated is again a question that could have been answered by congressmen that have asked this question of the Treasury, of the Fed, of the Treasury. Well, can we have an audit? No, you can't have an audit. Why? When was the last audit? Andy, when was the last audit? Was it the 50s?
Yeah, I think 1953. And I talked with Judy Shelton about that. And she said the excuses were stupid, that they say it's too expensive and logistically challenged. She said, this is the United States, for God's sake, spend a few $million and get it done. They will do it. I think they're going to audit the Fed, which holds the gold on behalf of the Treasury. I do believe that we are on the cusp of a revaluation in gold. I really do. And
so it's a lot of hearsay. We know this, but when's it going to happen is our question. When is COMEX, silver get a real price? When does gold get a real price? When do we blow up COMEX? We know it has to happen, but we don't know when it's going to happen. Is BRICS forcing it? We don't know. Most people don't understand BRICS. They don't understand Russia, China are coming out with the gold-backed currency. I mean, it just blows my mind how stupid some of these people are, or they just don't want to say it. I don't know. All right. So I think that's enough of Mark McGuire and this one. Let's go to Mark McGuire and this one. So here.
If you're thinking of going back to school to get a new job so you can earn more, don't do it.
Shut up.
And there it is.
Okay. So here's some idiot. Peter Krauth, he's a Canadian. I can tell by his accent. Very clueless. So he doesn't understand COMEX. This is why I titled my class, was listening to this idiot. He's doing a chart and he thinks, oh, and when silver hits 35, silver should hit 35 by the end of the year. Like, this guy doesn't have a fucking clue. It's you can't chart it because COMEX isn't going to let it happen because they blow up their derivatives. But yet he's using a chart. So I don't really want you to listen to this guy too often. I'm only using it to blow him up, like I did that Mark Moss guy and like I did that Marxist guy. That's why I do it, because you don't know enough when you listen to these guys. Oh, that might be good. And so what I'm trying to do is say, this is the landmines to look out for. So let's play a little of this, but let's digest the others. So we all know they're People are taking delivery. So it all backs up. Let's back up. What is inflation? So what is a medium of exchange? Is money. All right. Is this money? This is not money, but this is an asset. If this is a 10, it's worth 100,000. I hope it is, but I don't know. It could be a 9. It's a little off center. But as hard as this is to get centered, it certainly could be a 10. It's a beautiful card. Corners are crisp. The picture, the card itself is very, very nice card. So this is not money, but it is an asset. Is this money? Yes, it is. You'll call it fiat, and you don't think it's money. It is money. It's fiat money. It's money that's not backed by anything. The value of this money keeps going down, but it is money. It is a medium of exchange, which is used to trade and transact goods and services. So you go get paid in this, you go to the grocery store and use it, you go to the restaurant, you buy clothes, you buy glasses, you buy your I don't have my Mantle card out. I got to get that. You use it to buy this, you use it to buy gold and silver. It is money. It is fiat money, which means it's made by the banks. That's what fiat is. Banks made, but the banks print it out of thin air, and there's way too much. And the more they print, the less it's worth until it goes to zero. Unlike the Marxists who said, it can never go bankrupt. Okay, so people like that we ignore, and we run the other way. I don't want to buy a shower. Or now they're selling me solar panels. I'm getting that now. Oh, you're interested in a solar panel? I live in a fucking apartment. I don't even have the top floor. I'm in the bottom. So what is the solar panel going to do for me? If I could even get one and even change my electricity to it. What happens if it's cloudy out? I guess I don't have energy or electricity. Anyway, this is money. I know people don't want to, they keep calling it fiat. It is money. It's more money than Bitcoin. All right. This is money. Bitcoin's not, because I can go to Kroger's with it, but I can't go to Kroger's with Bitcoin. This is divisible where I got $1 and a quarter and $5 and $20. This is used to buy things. I can't do it with Bitcoin. Bitcoin is not money. Bitcoin is about the same as this. Would you rather have this PSA 10 for 100 grand or a Bitcoin, which is worth, I saw 95,000 yesterday? What would you rather have? I think I'd rather have the Montana card because I hold it in my hand. And if I need to sell it, I can go on eBay and sell it. And then if I want to, I can, maybe I could even go to the gold store. If this was graded PSA 10, I could probably go to the gold store and say, look, it's worth $100,000 PSA 10. It's graded. You have no risk. I'll take $100,000 worth of gold for it. Now, would they do it? I don't know. Are they interested in trying to sell a Montana card for 100 grand? I don't know. But this will hold value. This is not volatile. And anything physical is not volatile, right? The silver and gold are not volatile. But this is money, right? So understand what money is. And however, here's the whole game being played. If you print too much of this, this loses value. This is the problem. However, if you print too much of this, this gains value. So you can see the game. If you print this to death, this goes up in value. Also gold, also silver. And that's the whole point of why you get out of this, because they keep printing it. They can't stop printing it because they have expenses. They got to pay for Social Security and Medicare. They got to pay for the military. They got to pay for the debt. So they got to keep printing this, and they don't get enough in. They're spending more than they're bringing in, so they're fucked. Which makes this, you can't print any, there's only there's maybe a couple hundred PSA 10s, or we can go back to this card. I mean, this, you're certainly not printing anymore. This is 1969. 68, 69, 1969 Bobby Orr, I believe. Yours is a Pro 3. He's 5'11", 180 pounds. Jesus. But it doesn't give a year on the card. I believe this is 1969. All right, but you're not printing this anymore. So once you got it and it's graded, this is not losing value. It's only going up. And as you print this, you don't print this. You can't print that anymore. This, Barry, you only have 99 of. This you have how many, what, 160 trillion and 99. This is not losing value, especially being Barry Sanders, Joe Montana, Marino, Elway, Jerry Rice, Emmett. You're not losing value in those. But you keep printing these and printing. So the game is, we have this as the medium of exchange. This is our money. This is, you get paid in this and you buy things in it, which is what money is. But you're not supposed to print it to death. It's supposed to be scarce. It's not. But it's accepted. Grocery stores, restaurants, you want to go take a trip, you want to go buy clothes, you know, anything you want, you use this for. Now, we might use it as a credit card, but it's the same thing. It's just being paid with the paper. But you're not supposed to print it to nothing, which is what's happening. So what people don't realize is they think, oh, this will never lose value. What did the Marxists say? Oh, you can keep printing, it'll never go bankrupt. Well, that's a fucking lie. Yes, it is going bankrupt. It's worth a penny now. This has lost 99% of its value. That's why you don't see the full dollar, because it's not worth it. This is worth 1 cent. In other words, you know, go buy Cheerios. It's $6 for a box of Cheerios. It used to be 99 cents with this. So what it says is this doesn't buy as much as it should, meaning it lost its value. However, you're fooled because you still see the 1 on it, or you still see a 20, or you still see 100. And what you don't understand is not worth the 100 anymore. It's only worth $100 bill is worth $1, but you don't understand that because you see the 100. And what do we see in gold? We see the chart. We go, oh, what's gold today? Oh, it's 29.20. It's 29.10. It's 2,900 for an ounce of gold. And that's how you're measuring gold, but you don't see the same measure in dollars. You don't see the dollar measured like that. What's the value of the dollar today? Oh, it's 1 cent. Oh, okay. Because if they did, there'd be a major riot in Washington, and they'd hang J.P. Morgan, which he should be hung, because he's printed the money to death. And now, even if they're aware of it, there's nothing they can do. And then it's funny how nobody's aware of it. Well, they can keep printing money, nothing can happen. Well, who's the idiot thinking that, right? Like I say, you can have a pumpkin pie every day. You're probably going to gain weight because you're eating too much carbs and sugar, more than your body can handle. So they store fat. That's what happens. So with that said, we understand the money game. So now we move forward and the dollar's gone. It's not worth anything. So we have to replace it. So I give you an option. You can take the Montana card and you can buy this. It's worth 100. It's based on the grade, because the higher the grade, the more limited it is. So when Barry has 99, it really doesn't matter on the grade. There's only 99. Now, if you get a gem mint 10 on this, they're probably all 10s because there isn't a centering issue here, but you're still only going to have 99 of these. So the value is pretty much there. If this is a 10, it's worth 100 grand. The value isn't going anywhere. There's not that many 10s, and it's 100 grand, and that's it. Now, what'll happen is the money, the 100 grand is really worth less, but the Montana card would go up. And that's what happens. So if you think logically, the value of your money goes down, but the asset you bought doesn't go down, right? This maintains or goes up as the value of the dollar goes. Now, the only time this will change in value is when you change this. So what I'm saying is, once we go to a gold-backed currency, gold's worth a lot more than 160 trillion bullshit dollars, right? Which is worth nothing. So this would change in value. So when the gold comes out, the gold-backed currency comes out, this might go down to $10,000 But that's gold-backed currency, which is worth a whole lot more than this. So what you're doing is you're revaluing this. You're taking it out, 100,000 of these, or how many gold coins do I need to buy this? Right now, let's say 3,000 would be 90,000 roughly. So it'd be 30 ounces of gold for this, but I don't buy that because it's priced in bullshit dollars. So in gold, it might be 5 ounces of gold because gold would go to 20, 30,000 an ounce. Let's say gold goes to 20, 5 ounces of gold will buy this. So right now it takes 30, but it's not priced right. That's what COMEX is doing. COMEX is killing the price of gold. So it looks like it's 3,000, but the real value of gold, if this is 100,000, are you telling me the real value of gold's not 100,000? Or let's take this card. I mean, this card's not 100,000. I don't know what it is. Let's say 20,000. This card's worth 20,000. Again, it'll take. This isn't going to lose value. But the dollar is. So that's the story I'm telling you, is that the dollar will lose its value, but these assets won't. The Rolex won't. The ore card, Montana cards will not lose their value. It'll change in what you're buying it in, dollars or gold, but it won't lose its value. That's why you buy assets. Now, my bitch on Bitcoin is, I don't know what it is. I know what this is. I have this in my hand. You can't take it from me. What's Bitcoin? I don't even know. It's not even real because you can't hold it in your hand. You can't even see it. I think that's what these tokens are, is to give you a coin instead of just thin air. But if they're not backed by anything, they're worthless. These are in dollars, but these will switch. So this card will go from $100,000 to, like I said, maybe 4 or 5 ounces of gold. Will buy this card. And you will buy it if you like the Montana rookie, and it's worth 5 ounces of gold. And as gold goes up, it'll be worth 3 ounces of gold. But that's still 100,000 basically is still the value of the card. But as they keep printing this goes away to zero. And every currency in the history of life has gone to zero. We can go to the Romans, the Germans, the French, the Spanish, the British, and now Venezuela, Zimbabwe, Greece, Sri Lanka, Brazil, Argentina, all have the same thing in common. Their dollars have been printed to death, and they are all worth nothing. That's another reason the demand for gold is up, because people realize this is gold. This won't go down. Gold will not lose its value because you can't print gold. Why did this lose its value? Because you printed the gold. You printed the dollar. 160 trillion of these things, because they're all over the world, used to buy different currencies. They're no longer used. The petrodollar's gone. You can use US dollars. You can use yuan. You can use rubles. You can use whatever the fuck you want. They're eventually they want the gold-backed dollars, which is what BRICS will be. So all the countries, including our Euro friends, have printed this to zero. This is worth 2 cents, and this is worth 1 cent. This is worth 5 cents, let's say. They have no value because they keep printing it. They're destroying their values. Now, does their governments and treasuries understand this? No, because they're all Keynesians or they're all Marxist or communist. They don't understand you can print them to zero. How they miss this is because they don't understand what the fuck they're doing. They shouldn't be doing it, but they think, well, I'll just keep printing the euros. And if we need more money, I'll print more euros or I'll print more dollars. But they're missing is that the value of the dollar by printing more goes away. Just like this, there's only 99 that can be. Well, why do they do that? I mean, why don't we just print more Barry Sanders? Because if you print more, they're worth less. If they're 99, then that's all they can print. They have a bigger value. That's why the numbered cards are more demanded, especially of a Barry or a Cal Ripken or a Brady or a Montana. They're worth a lot more. So the game is now in comex, they're now, so that's the inflation, inflating the supply of the currency, printing too much of it. I don't know why everybody wants to call it, what are they, debasement. I don't get why they call it debasement, because debasement is taking gold and silver out of the coins. And I say this, and then I keep hearing these guys calling they're debasing the currency, and they're not. They're not taking gold and silver out of paper. Anyway, I get these guys, just how stupid they are. They just hear something and they repeat it, and they don't know what they're talking about. And when you hear it, you realize they don't know what they're talking about. So the inflation is ruining the dollar to zero. It never goes down. Oh, inflation's coming down. I heard that yesterday. I'm going, every time I hear that, I cringe. I'm going, it can't go down. You've printed 160 trillion of these. You've inflated the amount of these, and they're worthless. The only way to make this have value again is to burn them all and limit them, or you come out with a new one that's limited. You come out with a 99 count dollar, or you back it by something limited like gold. Gold is limited. You can't print gold. So if you come out with dollars backed by gold, now the dollar has value. You basically kill the inflation, and that's the only way to do it, is with gold. Now, the problem with gold is you can't print more than you have. You can't print gold. That's the beauty of it. If you back your dollar by gold, and there's $1 billion worth of gold, you can only have $1 billion. You can't make 10 billion because you have to back the dollar. The beauty of the gold standard is you back the dollar by gold. So you sit there and you say, well, this is a $100 bill, so I want $100 worth of gold. You go to the bank, they give you $100 worth of gold. It only works if you only have $1 billion and you go to the bank to do $1 billion worth. And the Fed would hold it. So you go, hey, I need $1,000 of gold for Howard. And they, okay, well, Tuesday it'll come in, you give them $1,000, you give you $1,000 worth of gold. That's why gold's the magic key, and silver. It's money. It can't be printed. So you can't ruin the value by printing too much of it. So how these guys don't understand this blows my mind, and what they're doing on YouTube blows my mind more. And that shows you it dumbs down everybody because nobody understands it but us. And so they go, oh, well, there is no inflation. I'll keep buying stocks and I'll keep buying that. Stocks are another thing where there's a lot of shares outstanding. You buy Apple, how many shares are outstanding? Is the value real? No, the value is fixed. The shares, there's a lot of manipulation in that, like there is in comex, where the price is going up, not based on supply and demand. Whatchamacallit, Michael Douglas is Blue Star buying. He buys it, and then it goes up, and then he sells it, and then you buy, and you get fucked. Stocks are very manipulated. Madoff, what was that? Well, give me money and I'll get somebody else to give me money, and I'll give you 15% of his money. And we'll keep doing it over and over and over. And then I'll say, look at how smart I am. I got 15%. And then you've done it. And then other people go, wow, yeah, it's real. I get 15%. And then the SEC gets their share. So they shut up, which says, oh, the SEC says it's okay, I'll buy. And then you got JP Morgan running the bank account, not saying a word. So everybody's in on the scam, and the poor people, but the people should never have gotten fucked, the ones who made money. You can't assume they knew what was going on. I don't know. I'm an idiot, but I know I'm getting 15% a month. That's great. That's Madoff. But that's what you have with this. Everybody is losing so much on it every month. And you don't know the value of your dollars drowned. So therefore, I can't keep it in the bank, because if I keep it in the bank, my value is going down. If I keep it in stocks, my value is going down. If I keep it here, the value of the car does not go down. The value of the dollar drops, so it should take more dollars to buy Montana, but the Montana itself being not printed again is not losing its value. The Rolex does not lose its value. So what you want to find is things that won't lose their value, hence gold and silver. And what you want to do is get out of things that are being printed that are losing value, and worse, they're not telling you it's losing value. So that's inflation, that's investments, that's stocks, it's and bonds. It's basically as they print more, this is losing value. So why do you want to have 500,000 in a bank account? Thinking you have 500,000, it isn't worth 500,000. It keeps losing value. Then you go into the stocks. Okay, it's manipulated. Apple went from 100 to 200. Oh, I made all this money. You're still in money. You still are in this shit that doesn't have a value. So $200,000 is not worth anything, as I just said. The 500,000. If you're in a 401k for safety, that's losing value because it's the 500 grand's losing value. And then you have the risk of the stock market crashing because since they're printing in dollars and every company runs in dollars, even their cash goes down and the value of their company goes down because it's valued in monopoly money. So that's why you have all these billionaires, because the money's worthless. So the $1 billion isn't worth anything. It's not worth what it was in the 70s and 80s. You never had billionaires in the 80s. It was millionaires, but you never had billionaires. So there's a lot of billionaires. Why? Because the money's not worth anything. The money lost its value, so to get $1 billion is not a big deal. So you can see where the creature starts from. It's printing, it's getting this off of gold, so you're free to print more. This is the problem. So you're printing more and more. This has no value. There's no scorekeeper. Nobody is saying the dollar's worth 1 cent. They are saying gold's worth 2,900 or 2,920, or they're keeping score on gold and silver using this bullshit money. So not only that, but then when they do derivatives to keep the price down with the bullshit money, this is why I bitch and scream going, well, gold's worth a lot more than 2,900, 2,940, and silver's worth a lot more than $32 because it's, again, being priced in bullshit dollars and it's being manipulated down, not free market. So these are the biggest points that people don't understand. So when somebody's trying to do a chart and say silver's $32, we'll get to that in a minute. When he does the chart, says it's $32, you sit there and just roll your eyes going, you don't understand anything. First of all, you're charting something in manipulated money that isn't worth anything. They're not really keeping a true and fair price. So in Montana, I bought this card for $100. Then it gets a PSA 10 grade, and I really don't see the climb. All of a sudden, it's worth 100,000. So it went from 100 to 100,000 because it's limited and it's real, but it's limited in the fact that you can't print anymore, and there's not a lot of tens because of the centering. So with that point, you can see that, but it hasn't happened in gold and silver. I mean, I guarantee you, if this is 100,000, why isn't silver 100,000? There's more demand for silver than a Montana card, even a 10. And at 100,000, there's got to be less demand because it's so expensive than silver at 32. So why isn't silver 100,000 and gold 100,000? Because it's being manipulated and priced down. There's definitely more demand for gold and silver than the Montana card, I guarantee you. Now, this is more limited. This is maybe there's 1,000 PSA 10s. Okay. Same thing here. Maybe there's a couple thousand PSA 10 Dunrose, Cal Ripken Jr. rookie cards. Mario Lemieux. I mean, how many PSA 10s are there? Let's say 5,000, whatever. I mean, but that's it. They're very limited, but certainly the demand is much stronger for gold and silver being worldwide. So the people in Russia and the people in China and the people in India are buying gold. They're not buying Montana cards and Brady cards, maybe Brady, but not Montana, not Lemieux, not Cal Ripken. They're not buying those cards. So the demand is kind of, Joe Montana is pretty much U.S., maybe a little Canada. Where gold is Germans and Swiss and Chinese and Russians and Japanese and the U.S., there's more demand, even though there's more supply. And then how much supply is there when you have these 400-gram bars? How many 1-ounces are there? I mean, there can't be a lot of 1-ounces when you got the 400-ounce bar James Bond style in Goldfinger. You've got so many of those. The central banks are buying those. They're not buying the 1-ounces that I am. So this is where you really see that. So that's where we're at. This is what's happening. So they keep printing, but they don't keep score. And then they go, oh, look at the FX versus the ruble. Well, how many ruble? They're printing more rubles than this, but how does that come up? That's bullshit too. That's just, it's price fixed. So let's get to this idiot. Silver market recap.
Over to you, Andrew.
Well, hi, Peter. Thank you so much for a return visit with us.
This is today's
you
Mark
believe
McGuire.
how many people have been harassing me to get Peter back. I mean, what good timing today there, Peter. We've got gold, and we're recording this on Wednesday the 5th, just so that people know where we're recording this from. But basically, we've got gold rising up, making all-time highs. Each fix has been, this is the 7th fix now above 2,800, and it's looking pretty good.
I mean, it's 10 days ago. It's the 5th.
We're going to talk about silver here because obviously it's lagging a little bit. But I think from our perspective, we have complete faith that it's about to rally. But let's ask you what you're thinking today as we parachute in, and perhaps maybe the best place to start would be 2024. Did that actually did silver do what you thought in 2024? Before we look at anything now.
Thanks for having me, Andrew. Always fun chatting with you. And so to your first question, yes, it did. In fact, I had said that I saw silver reaching 35. I think I had said originally in the last quarter. It did that, I think, just prior to that, or just near the beginning of the last quarter. Hitting $35 and then dialing back from that. So, no complaints on my end. It did underperform gold slightly, which, given, I guess, maybe some of the macro economic environment, perhaps
Who's the
not
Keynesian?
too
He just said it.
But as I say, it did meet my target and did perform well. And I'm going to repeat what you said. As we're speaking, gold's hitting all-time highs. Just very exciting. 28.80 was the last that I saw for spot price. Silver was, I think, at 32, almost 32.50. That means if you look over the past maybe 6 months or so, that 32, I think 32.20 was the previous peak in early October. I think it was October 3rd or 4th. So we've now taken out that high. Hopefully we'll close today above 32.20, and that will mean a new high for the past.
All right. He doesn't even understand it. He's talking paper. But he doesn't understand he's talking paper. It'll hit a new all-time high, paper high. Silver hit 35, but it didn't hold because it's still price fixed by JP Morgan and Comex. Doesn't get that. He's trying to say, look how smart I am. I predicted 35. I don't remember silver ever hitting 35. But even if it did, it doesn't matter. It's at 30. It was 33.40 today. Now it's at 32. 40 doesn't matter. I mean, that's the point. It doesn't, it's all price fixed, but he doesn't quite understand that. This guy's obviously a Keynesian because you never hear me say macro. I'm a micro guy. Well, I'm not even really micro or macro. I'm just telling you the way it is. Inflation's inflation. It's not really macro or micro, but I'm never going to say macro and micro unless it's very unusual for me. because I'm not a macro guy. I did have a Austrian economist macro and a micro class, but really wasn't Austrian. It was a little bit of Austrian. But the point is, he's not getting the fact it's price fixed. This frustrates me more than anything. Here's this guy saying this and that, and look how smart I am. It's fucking paper. It's not physical. What's the physical price there? And he doesn't have a clue. All right, let's move on a little bit more with this moron.
Quarters, and obviously very bullish. When you look at momentum indicators, just in the silver price, for example, things like the RSI, the MACD, these things are all trending upwards. They certainly point to strong momentum. They're not overbought even at this point, which is quite encouraging. So I actually think that we could potentially see over maybe the next few weeks or at least by the end of this quarter, we may actually see $34 or $35 silver. Now, I've been telling my subscribers that I thought in the first half, at least of this year, we would go back to 35. Again, that could very well, this is one of these psychological ceilings, so to speak. We could bump up again.
Okay, I'm ready to throw up. All right. Please don't subscribe to this guy. He's fucking clueless. Okay. As I've stated 1,000 times, until COMEX blows up, silver's not moving because they're doing derivatives to keep the price down. What the fuck's this guy talking about? $35 silver. I'm sorry. What are you talking about, 35 silver? It's manipulated. It's price fixed. It ain't getting to 35 because they don't want it to, because the bullion banks have all these derivatives at 22, 23, 24 that if it goes over 35, they're all fucked. So they won't let it get that high. This is not a free market item. Doesn't understand that. His indicators. What indicators? The ABC, DEF. The fuck are you talking about? There's only one indicator. Is there demand in the market for that? Is there demand for Montana? I don't need an indicator. I don't need a graph. Is there demand for this? Is there demand for silver? Yes, it's through the roof. Everybody's getting out of, because the dollar is inflating. It's a very simple analysis. The dollar, as we see, is being inflated to nothing. Gold and silver are the lifeboats. So you jump in gold and silver. Very, very easy. What indicators are you looking at? What trend? What $35 are you talking about? Once we blow up COMEX, you see $500 silver. I don't need a chart for that. I don't need anything. That's what will happen. So it's a very simple thing, and yet I don't know what he's talking about. These indicators and that in my charts and 35. Okay, fella, it ain't going to 35. It's never going to go to 35 until we blow up COMEX or make it a tier 1 Basel III compliant on silver. We have China and Saudi Arabia and India and Russia buying silver through the, shitloads. However, that doesn't mean anything. It doesn't raise the price. It's only raised by the derivatives in COMEX. So you've got to understand the most obvious thing, which he doesn't get. This is why it's hard for me to listen to people like this that are just so stupid. I'm looking at my charts and I have a newsletter. Fuck, you should be giving people money not to use your newsletter. Oh my God, are you kidding me? This is why I do this every day. I'm not going to charge people to educate them on a newsletter. Just come on in and you'll hear it and you'll understand and off you go. A newsletter? I wouldn't pay 5 cents for your newsletter. Who's this fucking crook? All right.
It's that and not necessarily make it through in a sustained way immediately. But I think that, as I said, 30 would be the new floor. We've seen that for some time now. I think once we reach above 35, that will become a new floor. And I actually think that by the end of this year, sometime in the second half, we can probably at some point touch the $40 level.
Oh, my
so,
God.
with gold, it's volumes.
Seriously, based on what is it going to touch the $40 value? There's only one thing. COMEX getting the fuck out of it, or all these countries going right to the silver mines and eliminating COMEX. 40 by the end of the year. What is that? What is that based on? A trend analysis of bullshit derivative prices? You're never going to see 40 because of comex, because of the price fixing. However, once you kill the price fixing, it's 500. But it doesn't move until you kill it. So I don't know what he's looking at. He's talking out of his ass. He has no clue what he's talking about. This is why I get frustrated with Mark McGuire and these stupid guests. All right, let's see. We're getting into a little bit of liquidity from comex. Let's hear a few more minutes of this idiot.
And the beauty of it is, Peter, is that we're talking about central banks. We're talking about central banks outside of the US here. We're talking about all the Basel III compliant markets, which means because gold is Basel III compliant, so therefore, if you put up a gold offering, you better have it fully NSFR compliant backed. Therefore, it's T+1 deliverable. So what we're seeing is the beauty of this is that while it's great to see the official numbers there, and as you say, that is mind-boggling. It can't be hidden. It is what it is. The beauty is that it's being settled physically. Now, when, for example, in the physical exchanges, unlike the comex, which is diluted, and not for long, we hope, but anyway, but basically, for me to trade, or not me, but if somebody wants to trade on the SGE, Shanghai Gold Exchange, first thing you're going to need to do is buy that bar. Physically own that bar. It's actually inscribed to you, and only then can you sell it. Only then can you. So in other words, it kind of imposes a discipline on you. You think, well, do I really want to sell it at this price? So yeah. I think to me, that's what the beauty of this is. It's being settled in physical markets. And each time we see another ounce, another kilo, another ton heading in that direction, it's not coming back. And we know that what that's doing is sucking paper market liquidity out of the only exchange still not compliant. Just beauty to me.
Absolutely. And something that I kind of wanted to point out is that if you think about, these stats that we're getting from the World Gold Council, I'm not the first one to say that they tell you what they're able to get official numbers for. And there is probably little doubt that the buying is actually well beyond the numbers that we're getting.
Yeah.
So that's also telling that it's probably, I can't even venture a guess in terms of percentages beyond the numbers that we're told, but I can only imagine that it's significant, meaning that, it's probably well beyond a quarter of all the gold flowing to worldwide central banks, typically non-Western central banks. So, people are just sticking their heads in the sand if they don't make a point of thinking about what the implications are of this. They're just massive. They are not comfortable holding. I was just looking at some stats the other day. The percentage of holdings of reserves by central banks globally has been falling for the last 20 years or so. And we've gone from, I believe it was around 62, 65% to about 54% now. And the trend is clearly downwards. So central banks around the world are doing two things. They're doing a lot of things, but two main things maybe for us to consider and keep in mind. They're, have huge implications given what we're talking about, is that they are buying gold, physical gold, hand over fist. They are selling US dollars at a very, very steady pace. So, how much more, how much more indication do you need? Again, with some reservations, I'm going to call this the smart money.
I doubt that.
keep that in mind when you think about where you think things may be headed. And I also think that there's a good chance that the broader stock markets have rolled over. There are a few indicators of that. I think the S&P peaked from what I saw just earlier today. I looked at when its last high was. This was 3 days after Trump's inauguration. I think that there was a lot of, I'm going to say, hype, and maybe also a lot of FOMO and all of that sort of stuff built in. Now, a lot of that had to do with the tech stocks. We've seen this, potential real threat coming from DeepSeek AI out of China that was apparently a lot cheaper to develop. If the air comes out of the Magnificent Seven, that is almost certainly going to have big repercussions across the broader indices, because there's just so much of the value of these indices in these 7 stocks. And, so much.
So he doesn't get that they're manipulated either. I mean, this guy's really clueless. The stock market's manipulated, just like COMEX. It's no difference. Most of the shit that's run by the banks are highly manipulated by JP Morgan, Goldman Sachs, and these guys. So the Magnificent Seven, which was a movie, not stocks, the big 7 stocks, or the 7 price fixed stocks, as you can call them, are all price fixed. They're all manipulated. They're being supported higher. Their earnings don't support it. Tesla's was like 700. The PE ratio is 700. Yeah, that's a stock I want to be in. How the hell was it get to 700? Only because it's manipulated. So they start talking about gold and silver stocks. Let's see. Let's go jump here. But anyway, they're trying to talk about silver stocks, gold stocks. The whole market's going to crash. They're not going to survive. They're going to get dumped also, because it's an auction house. So you have $1,000. So you have money. Well, which card do you want to buy? The Ripken card? Do you want to buy the Brady card? This is an auction. You decide which card you want. They're all competing against each other. And that's one thing. And it's the same with the stock market. Do you buy the Tesla or Apple or Amazon, or do you buy the gold stocks? Well, none of the brokers are putting you in the gold stock, because there's no money to be made there. They get their commission based on stocks. So they're all going to put you in Amazon and Apple and Tesla, and everybody's putting in, and they're all going up. And this is the problem. So they're not a real value. So I would not buy putting your money in silver or gold stocks. I would just buy the gold and silver, because it's not manipulated. It's manipulated down, as I showed you yesterday. The market for gold's here, 5,000, and the price is down here. This is a problem market. This is not where the market for the Camry is 25,000. They're selling it for 35,000. So it's too high. Nobody's going to buy it. But it's reversed in gold, where the market in gold is, I'll give you 5,000 and you only have to buy it for $3,000. And that's the problem with gold. It's not priced properly. Or silver. It's silver at $32 an ounce, when people would pay $50 an ounce for it if they knew it was real and not price fixed. So these are not price fixed. The card, the Montana, the Brady are real prices. They're free market prices. The Rolex is a free market price. All right, let's hear what this moron's got to say.
The other thing is, we talked about gold making all-time highs here. I think
paper highs.
2,900 futures. We're talking, 28.75 or 80 in spot. I mean, goodness me. And then we look, and the first thing that brings to mind is, okay, where's silver? What? 87 ounces of silver to buy an ounce of gold? Hang on, something is radically wrong. And I think then you suddenly think, well, then, so we have our calls. I go around all the desks, 5 a.m. every morning, all the Asian desks. They cannot believe that it's manna from heaven. They cannot believe they are buying so much stock. And obviously, we've got this interim situation where you've got they're trying to plug the hole, the big chasm, the abyss, as I call it, in the comex, and so you've got premiums, and in fact, we evidenced in one instance, I snapshotted it and put it in an episode which we just did, $1.34 per ounce, $1.34 premium. All of a sudden, now you've got, and each time you're doing that, you're sucking supply out of local London. You're sucking physical supply, which has gone below threshold levels. And what are you doing there? What you're doing is not only are you sucking it in, but all of a sudden, I can now afford to put it on a plane. Off it goes. And it's there in 24 hours, much like we put gold on a plane. So this is ludicrous. I mean, so really, you've got this drain, this literal drain coming out. And in fact, refiners, 8 to 12 weeks. If you want size, 8 to 12 weeks for gold. Ask for silver. Sorry. Well, you can lock it in the spot market, but we're making money on gold. We're not going to, so we're not even refining silver at this point. This is worse than COVID was a single event where refiners were shut down for a period of time. Naturally, there was a bailout. Everyone jumped in. Now, there's no COVID. It's simply a supply shortage. All that's happening here is that no one wants to put anything on offer at this price. Give me a proper price, and there'll be someone will sell. Maybe it's 38. Maybe it's 40. Maybe it's more.
500.
But the point is, if I then look, and I know we talked about this last time, the silver ratio. When I do my calls around, the aggregate of all the liquidity providers I speak to are saying that's going to break. This is going to break the ratio trade. So then they're saying, well, I'm saying, well, where do you think realistically, and not tomorrow, but where do you realistically? They're saying, well, go right back to 2011 levels, it was 33 to 1. Where do you think? That at 3,000 gold, that's $90 silver. I mean, it's not rocket science. It's not even pie in the sky. Your thoughts?
I mean, absolutely.
So what's happening in silver, as we talk market, right? You want to sell your ribs for $45 and the market's $30, right? So you can't, your price is too high. Again, this is reversed. The silver market is, I'll pay 10 to 1 ratio on gold, which is $300. I'll say silver's worth $300. It's 10 to 1 for gold, let's say. And you're selling it for 30. I'm willing to pay you 300 and you're selling it for 30. Where's the pricing mechanism? Because supply and demand should equal. In other words, if demand is up here, why is the selling price down here? When the selling price should clearly be at least equal to demand, but it isn't. I'm selling to Montana at $100,000, right? But people will pay $100,000. But you know what? I'm going to go on eBay and sell it for $10,000, a PSA 10, and people are going to look at me like, I'll buy it, and people will buy it, scoop it up as fast as you can for 10 grand, and they'll go sell it for 100 grand, but the value is 100 grand. And so what they're hiding from us is the value of the silver, which is why I say it's $1,000 an ounce, but it's not being priced properly. It's being priced at 30, even though the demand is probably 100 or 2 or 300. 10 to 1 for gold. If gold's going up, why is silver not? And that's when you know it's price fixed, and that's when you take advantage of it, going, I'll pay 300 for it, and he's selling it for 30. Where's the line? And you just keep buying it as much as you can. You cannot lose, because eventually, and this is when I say the market cannot hold, eventually, if I'm going to give you $300 an ounce, eventually the market at 30 will go to the 300, the equilibrium supply, the free market. So in the market, people will spend that, but it's being priced that. So like I just went and bought 10 ounces. I should buy a lot more because I know that price is fantasy land. And that's the point. So people see silver at $30 and they don't get that it really should be about 300 just by going 10 to 1 to gold. But gold isn't really priced properly. Gold should be about 10,000, which puts silver at 1,000. Hello, I don't just make my numbers up. So if gold's really 10,000 without these derivatives pushing it down, hence silver should also be about 10 to 1 or $1,000, and you can get it for 30. Hello, McFly, is anybody home? Because I don't think anybody's home. This is clear price fixing. Why they're keeping it at 30 is very simple. The idiot bullion banks, JP Morgan and Chase and Goldman Sachs, have done the stupid thing of doing derivatives at $22, $24, $25 an ounce. They've shorted it. They've said it's going down, and that's why they're in it at 24, 25, and they keep, like today it was 33.40 running up, and then all of a sudden it's 32.40. Did anybody sell an ounce of silver? Nobody's that stupid to sell an ounce of silver at $33. That's worth 300. But people don't know it's worth 300. This is the beauty of it. They don't know it's worth 300, and they look at the 30 and think it's worth 32 or $33. But they don't. It's worth, the value of it's 300. You can buy it for 30. Would you buy this $100,000 Montana? We'll assume it's PSA 10 for $1,000. Of course, I'd have a line out the door. I'd have 1 million people in my auction if I put it at $100 and it is a PSA 10. But why would anybody be this stupid? If it's $100,000, if this is really a PSA 10 $100,000 card, my auction starts at 100,000. I don't even do an auction. I do a buy it now or make me an offer. I don't dick around. Oh, I'll start the auction at 1,000, but my minimum bid will be 95. I mean, that's just pure idiotic. Hey, good morning, Aaron. Hey, King, do you think gold is going to go down more? What do you mean gold down more? What's it at? Oh, I'm on silver. Yeah, I mean, gold's going to be 5,000 an ounce. The demand's there, and it's a tier 1 and a Basel 3. Tier 1 means it's money, and Basel 3 means you've got to settle it in a day. So this is just derivative talk. Everything's priced in derivatives. So I don't think they can do much more derivatives because all the other people are going to buy it under 3,000. So 28.86, it's just bullshit. No, gold is not going down. Not in a free market. It's going down by derivatives, as is silver, but they're not. Nobody's selling. Nobody in the world's selling an ounce of gold. Only at the store or at my guy's jewelry store where I need to eat. So here's an ounce of gold, and then I can pay my bills. But none of the central banks are selling, and people like us are not selling if we don't have to. So no, gold's going up, 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 because it's in a free market worth a lot more, as I just discussed, and this is just derivatives. So yeah, in a derivative world, it goes down a little because they're doing derivatives, but they're only getting themselves in trouble. So China will be buying 28.86. So it's fine. I think it's down 35% on the day. No, it isn't. It's down 1%. What are you talking about? Gold down 1%, down $30, but who cares? It was 29.40. The U.S. comes in when China's asleep, and look at the derivative. Nobody sold an ounce of gold, so it's down 1%. It's down $30. It's just bullshit. It's just Comex, JP Morgan, Goldman Sachs doing derivatives, playing an option game, not anything in free market. So no, it's bullshit. The price is at least 10 times higher. And as I said, silver is such a joke at 32.37. It was 33.40 today. Oh, all these people are selling silver. Nobody's selling silver. Nobody in the right mind sells silver. I've never sold an ounce. I gave some to my friend Alyssa. She needed some money. I said, "Well, here's a couple ounces of silver." She sold it because she needed food, but generally that's it. But nobody like us is selling any of it. We're getting out of this shit that's totally printed to death. This is worthless. So this is really your question is who the fuck wants to get back into this? Nobody. Right? I'm not selling gold and silver, and then my alternative is to come back on the Titanic. Nobody's doing that. So nobody's selling gold and silver. Only the derivative banks, the bullion banks, who are trying to make money on derivatives. It's just fucking retarded. But no, it's not down 35%. No. Silver's up 0.5% today, but gold's down 1%. It's down $30 if you're thinking dollars, but not percent. So I'm not quite sure where you're seeing. This is the actual spot price on gold price. This is spot 28.86. So it's starting to come back up. My guess by the end of the day it'll be back to 3,000 to 2,900. It'll be 3,000 soon by next week. On its way to 3,500, on its way to 5,000. It's not going down because it's been price fixed. The price has been kept down, not on the free market, but price fixed by JP Morgan. And, that way you stay, because they want you to stay in stocks and in the banks. That's what JP Morgan, Goldman Sachs, Chase, that's what they are, right? They're the banks. They want your money in it, so they make money on your money. They want you in their stocks because they get commission on it. And if you are into gold, you're not in the banks and you're not in stocks. And I highly recommend getting out of the fucking banks and out of the stocks before it collapses. So be careful with that. But no, 35%, it ain't down. It's down 1%. All right, back to Mark McGuire.
I agree. There are a lot of things right now. The premiums are very high. There's the whole tariffs thing that in the U.S. they were worried about importing silver, and then tariffs kicking in. So a lot of silver has flowed towards the U.S.
Got nothing to do with tariffs.
There has been a lot of pressure on London inventories. We've seen those drain.
No, this guy has no thoughts.
What I find interesting is that if we switch to gold for a moment, I was just reading a few days ago that the delivery is normally a matter of a few days, and technically you could argue that London has defaulted because they're now asking for a matter of weeks, maybe 4 weeks, even more.
Okay. London doesn't have any gold. All right, let's move on. 34.
Yeah, Peter, and I think the reason is so gold is NSFR compliant, and so that changed the game. You don't have to look at any chart. And the first of, in fact, when the Bank of International Settlements covered all their 500 ton of bets it was in November the 3rd, I think it was, of 2022, just 2 months before they revalued gold as a first-year asset class. Now, silver still isn't. Now, it still plays the paper game. And here's the problem. I think what you're saying is what I'm seeing is, at this price, a paper price, because it's not a physical price, but if all things were level, and much like the SGE or a physical exchange, I have to own that bar. I have to fully pay for that bar. I'm not buying it on 4 or 5% or 6% margin to control the price. Now, then I start to look at, hang on, now I've got a level playing field. What is the real price I would be happy to sell my silver for? And you then look at the supply demand. And that's supply and demand. What you're saying is it's a hell of a lot higher than where it is now. And of course, there'll be any amount of silver to meet demand, to meet Samsung's demand, to meet all, Apple's demands or whatever it might be. Of course there is. But as you say, at what price? And I think that's the problem. And I think this kind of leads into one thing that I wanted to mention. People are saying, oh, the price of silver and gold has gone up because of tariffs. No, tariffs just exposed the chasm between the paper and the physical market. There's no going back. You've just exposed a weak flank. And you don't think that India, that China, that the BRICS nations see this discount and jump in and buy, knowing this is a window that's about to close. So, of course, now, while tariffs are the excuse, and yes, it just happens to have exposed this scam, the paper scam, and when we do see I think it's the COMEX that has to catch up. And I think the spot price of silver has to catch up with where the EFPs are at this point, because ultimately the COMEX has to become Basel III compliant.
So when COMEX hits Basel III compliant, silver is $300. So it's the example I just showed you. The market for gold and silver, is up here at $300, and the price is only 30. And it needs, what he's saying is, and what I'm saying is, it needs to catch up to the market. And it's way down here. And it's very unusual. Why the fuck would it be so cheap? Why would it be $30 when people are willing to spend $300 on it? Doesn't make any sense, right? Who's making out? They're keeping the price low, and that would be JP Morgan and Goldman Sachs, because they've got the derivatives and they don't want to lose trillions of dollars thinking that, oh, yeah, we're shorting it, the price is going down. Yeah, you're all fired because none of you have a brain in your fucking head. These are the stupidest people I've ever seen. Why would you short something with huge demand? You've got to be out of your fucking mind. All they've had to do is just go along with it. Do call options instead of put options. I think the price is going to go up. So why don't they just do that now? It's at $32. Why don't they all go and do call options and going, I bet it goes up, and they'll make a fortune. It'll go up to $300 if they would quit pushing the price down. These are the stupidest people I've ever seen. They're Keynesians. This is why we don't like Keynesians. They're idiots. So you can take advantage of that by buying it. So when Aaron asked, do you think gold will keep going down? Gold's still the real value of okay, so let's do the market with gold. 10,000, 2,900. Also way under market. Right now the market's about 3,500 and it's 2,900. So when the market, they'll keep buying until it hits equilibrium. But because what's causing this is this being printed to zero. The value of this is gone, which raises demand for gold and silver up. And the price hasn't caught up with it yet. So the price needs to go to where the equilibrium demand is. So in a fair trade, I'm willing to give you $5,000 for an ounce of gold. And you're only charging me $3,000. And I'm willing to give you $300 at least for an ounce of silver, and you're charging me $32. Thank you. I mean, we're dealing with a lot of idiots out here. The banks, the coin stores, they sell it because of COMEX. They're following COMEX to set their price, and COMEX is not anywhere near reality or near where the market is. So like I said, you go buy ribs and I'll give you $30 for it. Now, if they were 20, you'd buy them. But if they raise the price to 45 and you're willing to go 30, wait a minute. No, I can't sell any because I don't have a market. That's what I always, the Camry, right? It's 35, but the market's down here at 25. I bought mine at 24. So you see the disconnect, but this is reversed. Here, I'm willing to pay $300 for silver, and you're down at 30. Who would run a company like this? What moron would be running a company going, yeah, I know we could sell the Camry for 40,000, but let's keep it down at 15,000. Oh my God. Yeah, you're probably fired because you don't know what the market is and you're selling the car way cheaper than the market. And that's what I keep saying. You've got to understand the market and where it is. And the market for gold and silver, gold's probably 10,000. And because again, it's set, if we go back to square one, by this losing its value to nothing. But they keep sugarcoating it without explaining inflation. Oh, it's prices. It's not that we're printing the money to death. It's look at the CPI. And we throw out all the bullshit and we say, hey, it's 2%. Oh, so the money's fine. It's the CPI is 2%. What a fucking scam that is. And so you stay in money. Oh, I'll buy stock. I'll make my money in Apple and Amazon. And again, it's a deflection. It's a magician with the left hand, right hand crap. And so you're in there to make money, but you don't understand the money you're making is worthless. It's not worth anything. The only money worth anything is gold and silver. And then these will protect you. These will be fine for you because they're very limited. They're really highly in demand. And they're worth a lot, and their worth will not go down. And that's really what you're looking at. So with that said, that's the whole point of free markets. And that's the whole point of this class is to get you understanding these are way undervalued. I don't need a chart. I don't need any bullshit. All I need is to see the demand for gold and silver is much higher than the price. Because normally the demand for gold, every central bank in the world is buying it, and the demand for gold should trigger a higher price, and it's not. I mean, it's gone up a little bit, but poor Aaron, it's not down 35%, and gold is not going to go down. Even with this bullshit derivative, it's not going down. It's a temporary thing, but it's not even the real price of gold. The real physical price is 10,000. So you can get it for 2,900. I don't know, where do I get in line? Silver, the real price, it just going on 10-1 for gold at 3,000 would be 300. But the 3,000 for the gold's not an accurate price. That's not a free market price. So until we get free markets, we know the prices are under market. So I will pay this much for gold, and you're at 3,000. I'm willing to pay 10,000 because I got to get out of this because this is worthless. But that's where they're scamming everybody. You don't understand this is worthless. That's where I get frustrated going, it's not worth anything. The dollar's gone. It's not worth anything. Oh, wait, if you can keep printing the dollar and it can never go bankrupt. What is this guy from Mars? What are you fucking out of your mind? This is the problem that I'm trying to hammer home. You've killed the value. It's worthless because the government forces these places to buy it. You go to Kroger's and you buy it, but the steak's $17 a pound. What the fuck? What do you mean $17? That's not right. Oh, that reminds me, there's New York strips on sale. I'll have to go get some after swim. But that's really what you're at. You are at gold and silver are way, way, way under market. The demand is much higher than the price, and the supply is very low, and it can't be inflated or printed. So it's a go, go, go. Buy as much as you possibly can. When you're asking me how much should I buy, it's as much as you can. It's as much dollars as you can. And if I'm these guys with the 401k at 500,000, I'm selling them as quick as I can and buying as much gold and silver with the 500,000 to take advantage of these prices under market of gold and silver, which they don't get because they're not taught it. Hence why I teach it. So that's really what's going on. What is the value of Bobby Orr? I don't know. What's the demand for this card? It's mint condition. If it was graded, it's probably going to be a 10. What would you pay for a 10 Bobby Orr, 1969? 50,000. Okay. Well, if I sell it for 5, are you going to buy it? Of course, because it's undervalued, because the demand for this card, if it's a 10, is going to be, I might, if I got that graded as a 10, I might sell it for $200,000. It's Bobby Orr. I mean, you got to be kidding. How many 10s can there be? I never see a 10. 69 tops hockey. You got to be kidding me. So I'd put it out at 200 grand or make me an offer. And probably, since it's one of my favorite cards and favorite players, it'd be, I'm not going to go down on it. We know the Montana is 100,000. So that gives us a, we know this is 100,000 as a 10. So that's what you do. You know the market because you can see it on eBay, what it sells for by other people putting it on auction, and the market says, I'll give you 100 grand for it. So that's really what you're doing. And gold and silver are very much under market. The demand, the supply, the demand for the gold and silver are much higher than the price because the demand is being created by this and this and the franc and the pound and the Swiss whatever, and the yuan and the yen all being worthless, all being printed to nothing because they're not backed by gold, which creates all these being worthless. And then your only out is gold and it's undervalued. But people can't see between the lines going, well, yeah, $30 seems cheap. You know what? It's just not going to go any higher. And, you know, you just sit there and you go, of course, silver is going to go higher than $50. But it's right now, COMEX, which is illegal and price fixing it, is keeping it down, not the free market. And so the question to me is, when does the free market? And I just showed you a couple of different videos of Mark McGuire saying, I think this is it. I think we are about to get free market on COMEX. And I think that's where we're headed to. So once we hit free market, once we hear silver's a tier 1 or a Basel 3, as soon as you hear that, I would just empty my bank and buy silver as much as you can at $32, $33 an ounce, and you'll be a rich man. It's not a risk. There's no risk. It's high demand and the price is way low. And that's basically the best way to say it. So that's what we're doing, and go for that. Let's take our last look at gold. Gold 28.83 and silver 32.28. And again, it's different segments. So now we're in the US segment of COMEX. You get Chinese at night and you get London at about 4 in the morning, and now the US violently trying to do derivatives, and then they're going to lose another trillion when the price goes back up. So 28.83, not a problem. It'll be back. It was 29.40 at 6 in the morning. So, you know, you're not really, once China will buy. China's doing this on purpose, and India and Russia, they all, why spend 29.40 on an ounce of gold when I can get it for 28.83? So they're buying it and they're saving $30. Okay. Not a big deal, but that's what they're doing. All right. So that's where we're at. Go buy, especially silver. Silver, this is where you're the silver people. Luke, this is where your 6 boxes come in. It's so, the demand is so much higher than the price. It's a joke. So again, I would pay $300 an ounce for silver, but I only have to pay $34 because they do a $2 premium. That's all I have to pay when I would pay more. Look at my gold. I just bought a 1/4 ounce. I paid $822 last week, and I would have paid $1,000 for it because I just want to bet more gold. So, I mean, it was $700 and I was buying it. It was $600 and I was buying it. Now it's $800. I'm still buying it because it's still undervalued. The value I'm putting on gold is 10,000, which means my 1/4 ounce is 2,500. So if it's under 2,500, I'm buying 1/4 ounces. And as long as you're willing to sell it to me at spot based on what Comex is price fixing it at, and as long as I understand it's price fixed, I'm fine. So I'm not worried, oh my God, gold's going to be $500 again, or silver will be $2 again. It's not, there's too much demand for it. It's not going to happen. They'll reprice it. They have to. It makes no sense. We have a $36 trillion debt. What sense would it be to price gold at $100 an ounce or silver at $5 an ounce, right? It's on the books at $45 an ounce, I think, gold. And they're thinking of making it higher because obviously it doesn't serve them any point of being $45 an ounce on the books. So they're not going back to 45. Their only play is to go up to 5,000 or 10,000. That's their only play, not to go down. It's already at 45. So what are they going to do? So there's no threat in it. We need the free market. Once we get the free market, we start getting prices like 100,000. And that's what we want. All right. www.teaserking.com. You want to email me, go there. Hit the Super Bowl, Philadelphia plus 7.5 and over 42. And off we go. I don't know. I could start looking at basketball to try to figure that out. It's a shit storm with all the 3 points. I don't have a Magic or a Michael or a Bird to bet on. I don't know any of the characters. 28.83, gold's going up. I don't know who Luca Brasi is. I don't know. I mean, the only guys I know are probably, LeBron, who's like, 50 years old. And I know, who's the guard, Steph Curry. Those are the only 2 players I know. And, they're just jump shooter. Well, LeBron's just, you can't follow him. It's a joke. You can't guard him. And Steph Curry just shoots 3 points. So I don't know what these guys are. I don't know their value. There's no Kareem and Lanier and Jordan and Dr. J and all those guys. So I don't know who the hell anybody is. If they're all shooting 3-pointers, I don't want to bet on a bunch of 30-foot jump shots that go in probably 10% of the time. I got no interest in that. So anyway, we will see. So gold will be back to 3,000. Don't worry. Silver, the guy hopes 35. The guy's out of his fucking mind as far as 35, 40. What is that? The demand for the real price that people will pay for silver is $300 an ounce. I'm saying 1,000. That's the real price. This is just bargain price. And to say, oh, it'll go up to 35, it just shows you how stupid this guy is. Based on what? His little chart that shows derivative, the derivative chart that is fucking meaningless. Unbelievable. All right. I keep trying to go an hour and I keep going 2. Well, it's an interesting. Today's I thought was excellent, where I'm explaining that the ban and the price should be here and they're selling it here. I thought that's a very critical point. Stay out of Bitcoin. We don't know what it is. Stay out of the stock market and the banks because you want to get out of this that has no value. Why do you want to be in there? Well, I'm making money. But the money you're making isn't worth anything. It's Ponzi scheme. It's paper. It's not physical. So get into physical, get into these, get into gold, get into silver, buy a Rolex, buy something of value, buy a Picasso. Don't be in dollars. All right. www.teaserking.com. Have a good day, and I will talk to you probably tomorrow. Yeah, today's Friday. Have a good day, everybody. Be safe, be healthy. Go buy your silver. It's $300 that you can get for $30. Enough said. All right. Take care, everybody.